Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Austin here. He is a real estate investor specializing in site selection for healthcare groups. He helps clients outposition the competition and scale faster. He spent over a decade as a professional wakeboarder, and in 2013, he nearly lost everything after picking the wrong location for his retail fitness center. Austin now shows others how to find the right locations that stack the deck in their favor. He has been featured on NBC's American Ninja Warrior, CBS Sports, ESPN, and has interviewed more than 150 healthcare executives and founders on his podcast, Helping Healthcare Scale. So thank you so much for being on the show today, Austin.
Hey, thanks for having me. I appreciate it.
It's great to have you on here. It's great to have people from different disciplines and backgrounds because then we kind of understand all the different strategies that people are using out there for investing in real estate.
Yeah. Hopefully, I can provide some value.
That's what we're hoping. Yeah, I think you will. So if we just before we get started, if you can just give us a little background on yourself, both personally and professionally, prior to getting involved in real estate brokerage and investing.
Sure. So I got started out, I would say, like my career in athletics, really started when I was 12. And that's when I started focusing on wakeboarding and going to school and doing all that kind of stuff. And I decided that I want to be professional at that. And when I graduated from high school, I read the book Rich Dad Poor Dad and learned about this concept called house hacking. And so I was in a really unique opportunity that I knew that I could find other roommates, who wanted to come and live on a lake. So I would rent out rooms, or I would sign the master lease to the whole house, and then I would individually rent. I would take on the risk, and then I individually rent out the rooms with the goal of getting my rent for free. And so, helped get wakeboarders in to ride with and train with and get better and work on my skill. And then it also gave me some extra cash, some savings to eventually buy a house, which I ended up buying a house in 2011 and kind of did the same thing. Got a bunch of roommates. It was like a 4-bedroom house with a guest house, and I was actually getting paid to live there. So like I owned a house. I had the master bedroom. It overlooked. It was a 2-story house on the lake with a pool and a hot tub. And of course, this is the bottom of the market, right? So I got really lucky that with just the timing. But I was living there and getting paid to live there, and as my mortgage was getting paid. So then I continued to work on wakeboarding. I did that for about 10 years. In the background, I was kind of doing, the real estate thing. I ended up getting another house in 2015, and in between there, so I was doing. I started up some gyms as well. I was a franchisee, and that's when I learned about the site selection process. Almost picking the wrong location. So I ended up selling the gyms in 2019, right before COVID. I however, kept the real estate that I had. And when it was all said and done, I was like, I like this real estate thing. And so I ended up working with my partner who helped me do some site selection for my gyms. And now we focus on real estate for healthcare groups. So like multi-site healthcare groups, we'll do the same analysis that he ran to help me outposition the competition with my gyms. We run that analysis for other groups, like healthcare groups, to help them stack the deck in their favor, like you mentioned earlier. So now we do. I still do Airbnbs and short-term rentals, and then we also do site selection and investment for the real estate healthcare group. So I know it's like I feel like there's like three. There's Austin 1.0, 2.0, and 3.0. So that was a lot. I know that's a lot of information, but I hope that answers the question.
No, it's great. House hacking, it's how I got started too. And it's just great. It gets a lot of coverage, but I think it's something that it's a really good way of getting started in investing in real estate. How do you, when you speak to new investors, do you suggest that they take a similar path to what you did or go a different route?
Yeah, I always tell people about how I did that. It becomes everything's got a trade-off, right? And so I think that it really depends on kind of like your age. Obviously, if you've got like a wife and kids and you're just learning about it, like you're not really gonna be able to house hack. It's definitely like a thing for bachelors to do. But the good thing about it is that it doesn't really get in the way of if you have a full-time business. So like there's a lot of hype around side hustles, all the time. And I think Alex Hormozy has a good saying where he calls it like the woman in the red dress, referring back to that scene in The Matrix where it's like, if you're focused on this one thing, like the woman in the red dress is that side hustle that can distract you. You take your eyes off the prize and then boom, like the gun's at your head, right? So the thing I don't like about house hacking is that you got to live somewhere anyways. And so you don't necessarily have to focus on, running a real estate operation, right? Because a lot of people, I think, get into real estate with the incorrect assumption that it's passive income because that's been shoved down your throat with a lot of real estate gurus for years. Oh, passive income. Even though I love Rich Dad Poor Dad, that's what got me into house hacking. That's what got me into real estate. It's just simply not true. I mean, look, eat the fish, leave the bones. Like there's good stuff from that book that absolutely changed my life. A bunch of books that I read that helped, but like not everything was good, right? And I had to figure that out the hard way. And so yeah, I think that you have to you can the thing I like about it is just that if you're focusing on something and you're building something, you're an entrepreneur, you're starting your journey, whatever it is, you can still do that while you're house hacking without necessarily going full-time real estate. If you want to go full-time real estate and like scale, like that's a different conversation that we can have too.
Yeah, no, I agree. There's a lot of good nuggets in there. Yeah, the passive income thing, yes, it's been shoved down everybody's throats for years. I consider if I'm mentoring people, it's semi passive. I mean, if you buy like an apartment complex, let's say, you put a property manager in charge of it. It's a semi passive thing after it's set. I mean, you're still asset managing it. You're still getting calls for those big things. Yes, I mean, I'm not over there picking up trash and like collecting rent and stuff. You know what I mean? That's taken care of by the property manager, but it's a semi-passive type, I would say, type of an investment to the best. You know what I mean? And if you're doing work to that property initially, well, now it's like really, it's a job. You know what I mean?
Hmm.
But those might last like 2 or 3 months, and that's kind of how it works. But it's something that, yeah, it's completely true of what you're saying about that. So when the other thing too, you're talking about like the side hustles. I think that the great thing about house hacking is also that first of all, it's much easier to manage. So when I did mine, they were like 3 family properties. Okay. So you're really dipping your toe into the water on getting started. You know what I mean? Because most people, when they're buying a rental property, it's not close to them. Maybe it's 15 minutes, 20 minutes. You're like, oh, that's not that far. Yeah, right. But if you're working full time, I got to drive there. I got to do this. If I have to open up a door for someone, you don't know what you're doing because it's your first rental property. Let's be honest. I mean, I had no idea what I was doing when I became a landlord. You know what I mean? So it was something that
Right, yeah, because somebody told you it was passive income, right? So you just thought you bought it and then put it for lease and then you're done.
my dad was a real estate investor for many years, so his stuff was really
Okay.
they were like D-class stuff, so his stuff was very far from he had, like, a team
Uh,
he put together, so he made it the same thing, semi-passive, you know what I mean? But it's like, you dip your toe in the water, but when you talk to people, they have a full-time job, they're doing something, they wanna invest in real estate, it's farther away. Having the house hacking, all the units under like with you, you know what I mean? Or close, right next to you, whatever, however it's set up, but they're on your property. And then that way, if you're working on your property, if you're at your property, if there's an issue, I mean, you can go and look at it. You can go and like figure it all out. Yes, you have to live with your tenants, but I mean, there's pros and cons to everything. It's also a nice way of like you were making money. I was pretty much almost I think breaking even on when I did my house hack. So it was, yeah, I mean, it's still less expensive than,
which is nice. Yeah, it's still great though, right? Like think about that. Like 99% of the population has to pay for where they live, and you were able to live for free and you owned a house. Like they're paying your mortgage plus you live for free, right? Effectively, if you would have moved out, you would have collected the cash flow, right? But you stayed in there, and instead of having the cash flow, you got a free place to live, which is still going to help you get out of the rat race, which I think is like a really important thing. Like the earlier you can do that, the better.
yeah, the passive income myth, right? But unrevealed over here. But
I mean, yeah, and to your point, like it like you called it like a mini semi-passive, right? It definitely operates on a spectrum. And when I got into short-term rentals, I thought that was gonna be passive income. I thought everything real estate related was passive income. Well, that's like on the extreme side of management. I mean, that's a hospitality business. It's not quite as intensive as like operating at Starbucks or a dentist office or a traditional business, but it's definitely a halfway point between like the semi-passive long-term rentals and the full-on business. So it's just like very hands on. Now, of course, there's more upside because it takes up more of your time. But there is really like the only thing that's truly passive is if you're a limited partner in a deal, right? Like otherwise, if you're the one that's like creating the deal, finding, bringing it together, getting on bank debt is a challenge these days. Well, it's always a challenge, but it's especially hard. Like finding where the deal is, like that, it takes a lot of time. It takes a lot of knowledge to know what you're going to buy that's not going to lose money. And then just like the management of the asset, like you said, even if it's an apartment complex where you have managers, like there's still like somebody's got to be the mortar that holds all the bricks together, right? And that's the general partner. So yeah, there is no like 100% passive investing unless you're the limited partner, in my experience.
yeah, I think it's passive, and passive income gets mixed up with recurring income. You know what I mean?
Yes,
So
100%.
they're like, oh, it's passive. Well, you bought a business, it's got recurring income. It's like, like the insurance business is recurring, but you still have to handle the people that have policies with you. You know what I mean? So it is what it is. But let's talk about like what you're doing now with short-term rentals, because it's something that we touch on the show. Obviously, mostly what we talk about is like rental properties with multifamily stuff like this, residential. So talk to us about kind of some of the advantages you liked about short-term rentals versus maybe going another route into other asset classes within real estate, because there's so many of them.
Yeah, well, when I got started, it was definitely really scary to do short-term rental because no Airbnb wasn't a thing. I was like, well, can I get this leased or like, uh, or can I at least make up what I would get from like a long-term lease if I was doing it? So I was lucky in that I was able to dip my toes in the water because the second house that I bought was a duplex, and I had long-term tenants downstairs, and I was living upstairs. And when I would go out of town to wakeboard competitions on the weekends, I'd put it up for rent on Airbnb, and it always rented out. So I was like, oh, that's really interesting. So like I was able to kind of risk-free test it out. And I still have my other property, my single family property, and the tenants were destroying it. The long term tenants were just absolutely awful because, like I said, it was like 4 bedrooms plus there's a guest house, and nobody like I had one guy sign a master lease. He wasn't able to pay me like on time. I ended up like default having to collect like these 4 different payments from all these different people, and I'm like, dude, this is not what I wanted. So the property was trash. Every time I went over there, I was discouraged. So I actually put it up for sale for like a brief period. But then I thought, well, you know what? Before I actually sell this thing, like, what do I have to lose now? I might as well try short-term rentals. And it actually took off. Like, it actually did really, really well. And the thing that I liked about it was I could keep my property really well maintained because now I have maids walking through every time. I pay for the landscapers and the pool guy and all that kind of stuff, right? And we catch any damages, so your property stays in pristine condition, so you can sell it anytime you want. Now, the trade-off is the guest expectations have gone through the roof. I mean, it used to be rent it and they will come. Now we are charging more money, but so are a lot of people, right? Like not crazy amounts. And so to your point, or to our what we were talking about earlier, that I have a hospitality business. I have to have virtual assistants messaging guests. I have to have cleaners that are available all the time, like every single day, in case we get a same day flip or an instant booking. I have to have maintenance guys, like all like 20. There, I have 3 properties in Orlando that are like large, can sleep 16 to 20 people. One in Ohio that can sleep about 24 people. That or really it could sleep 40. I mean, it's 12,000 square feet. And so the 2 of them are simultaneously serve as a wedding venue, but like that's almost got like a full-time guy. I mean, like 12,000 square feet, that's like, you got to think that's like the square footage of 4 or 5 houses, right? Like that's almost like a full-time property manager, like that 40 hours a week type thing. So yeah, it's like, I just look at it as a business, like I have monthly calls with my virtual assistants. I have weekly calls with the property manager, and I'm on the phone like pretty much daily with the handyman. Now, we're kind of like doing a lot of improvements right now to create like a really top end, top of the line product so we can charge top of the line prices. But that's been a year long process, and it hasn't shown any signs of slowing down. So this was like that to my what we are talking about side hustle. Like this was supposed to be my side hustle. Now it takes up half my time, right? Like I'm like split prong between our commercial real estate and our site selection process and our developments, and then managing luxury event space rental and Airbnbs.
Yeah, that's a lot, man. That's great. That's Yeah, it's when you're talking about those large properties like that, it's really like hiring a handyman to do your apartment complex, something like that. I mean, it's just like there's a consistent list of work that needs to be done. You fix one toilet over here, you got to go over here, do this, do that. This doorknob is loose. This is that. I mean, it's just like no matter how good the property is, there's always something that's going to need, which is great. The problem there is that if you didn't have someone that was pretty much full time, it would just cost a lot. So the only way of really doing a large property, yeah.
Well, that's the crazy part. Yeah, like that's we deal with that a lot. Because I've had handyman who essentially said, "Hey, like, well, just go get it bidded out, and I'll match it or I'll beat it." And it's like, okay, I'm hiring you. Like, you're working like you're an employee. I need an employee, right? You're gonna get consistent hours. You don't have to go bid jobs. You don't have to waste your time or your gas to go quote somebody on something that there's zero guarantee for you in that situation. You show up, you get paid, right? But like I'm not gonna spend my time and my brain power bidding jobs. Like, no, if it's not that crazy hard and complicated and we can figure that out together, like you can use YouTube to figure it out. Like, I need somebody who's going to go do it. Right. And so, like you said, if I have to go, like, if you don't, I really don't know how people make money with just like 2, 3 bedroom, even like some of the 4 bedroom properties where they can't really have, like, you just own one or two, and like it doesn't really make sense to bring on a guy. You're always calling a third party service providers. I mean, 150, 250 bucks an hour, whatever the plumbers, HVAC guys, whatever they charge now. I mean, it's every week almost, like at least a couple times a month. You need somebody like I plus parts. Like, yeah, I don't know how they make money doing that, because you got to have at least kind of like enough properties to have a full time guy that's your employee who's really handy and really knowledgeable, or at least has the mental capacity to figure it out.
Yeah, you need a handyman that's not just painting type thing, right? You need someone that actually has. I had a really good handyman for my first set of properties we found, and just was very well versed in like heating and like plumbing. And you're like, those are very expensive things if you can get people out. You know what I
Yes.
mean? So,
And electricity is the third one.
it was just like, yes, it's. I mean, it's you need if someone's like well versed enough to be doing, those type of activities. Some of them, you know what I mean. Obviously, we're not going to have them do like stuff that needs to be licensed. But the thing though is that if they can do it, I mean, it saves you a lot of time and a lot of money. I mean, just coming out and like snaking drains and all that kind of stuff. I mean, if you
Yeah.
called someone to do it, it's like, I mean, it's cheaper for me to call my attorney to come out and snake it. No, it's like if
Dude,
they show up.
yeah, plumbers,
Yeah.
man. They, my wife's a physician associate, went to school. Like, it's like, I don't know if you know what that is, but you got to do a lot of schooling. Like, it's very intense. I mean, plumbers are charging as much as physician associates or more.
And they're turned down business. I mean, they get business all day long, and they don't have to worry about all the insurance that a physician has to deal with. But do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carillo, founder and managing partner of Harborside Partners. And since 2006, I've been investing my money and my family's money into income producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com. So going forward here, I wanted to talk about, because you had an interesting story and I want to kind of like drill down into it, like kind of what happened in 2013, and then we can kind of transition into what you guys do now, because it's a very interesting niche that you're involved with in regards to your real estate brokerage. So tell us what happened in 2013 and kind of how that changed your perspective on commercial real estate investing and commercial real estate in general.
Yeah. So I became a franchisee in like 2012, and we opened up our first location in 2013. It was called Nine Round. It was a kickboxing fitness center, and honestly, like it was 2013, like that first location. I picked a spot close to home. I got really lucky, and that location actually ended up working out. But it worked out really good. So immediately tried to open up my second location because I had a 3-pack. In the second location, I didn't like I was looking for a place that had high income, not realizing that high population density was equally as important. So I was only looking at the income, income demographics, and so picked a spot like that really was not a good spot, and that was like I where I almost lost everything. I mean, the it required me like really going in there and being hands on and trying to fix all of these problems and drive revenue, like in order to be able to account for all the expenses that we had, because the rent, like the location that I had picked, was just not bringing people in. I mean, if anybody knows Orlando, it was a place called Oviedo, and yeah, great incomes, but like low population density, where other place was near downtown and really, really high population density, which offset, even though it was lower income, the sheer amount of people offset that. And so it was my third, well, I acquired a location, was about to do my fourth location. And I was thinking to myself, I got to go to Winter Park. This is like the cool, sexy area. This is where I have to be at to be a successful gym. But then that's when I met my partner, and he ran the numbers and the demographic data, did an analysis. What we found was like Winter Park was super saturated, rents were really high, full of competition, and we looked at Kissimmee, and the demographics were wide open. I mean, like no competition, right? And like I was just going off gut feeling. And I just, I realized you can't make. And I knew what had happened earlier on my second location, and I just realized you can't make good decisions without good data. So I actually ended up getting in a disagreement with the franchisor. He wasn't allowing us to. He was fining us for doing like group sales and things that like were really driving the business. And it was really detrimental to us and a lot of other franchisees. And so I pumped the brakes on the fourth one, thankfully. And then I'm glad that he was such a terrible franchisor because I ended up listing them for sale and selling them in 2019 and right before COVID. And so if he had been a good franchisor and we had gotten along, I would still have them or I would have lost them in COVID, right? Like, luckily I got out. So I owe him a huge thank you for that. And that's when my partner invited me to come start working with him on the real estate side. So now, he's been working with urgent cares for 14, 15 years. We like healthcare because it's like a very safe asset, very safe industry, in comparison to retail or whatever. Healthcare is not going anywhere. And so we do a lot of like dental, dermatology, urgent care, vet, behavioral health, etc. And we go through, we run our analysis, we figure out how to stack the deck in their favor. Like we try and put them, in a place that's going to, maybe it'll outposition the competition. Where's like the most amount of ideal patients, where are they already going, and where's the least amount of competition, right? And then whenever the real estate's available, then we'll buy it. Or if nothing's available, then we can build it for them. So that's kind of the business model now.
Can you just go into that a little bit more in depth? You kind of gave a little bit overview of it versus. So how would you run that? So as I understand it, with like self-storage, for instance, what they do is they have something that says the population of an area and they divide it by the amount of self-storage square footage, you know what I mean, of that. And they figure out if it's overbuilt or it's not, right? Whatever the number is per person. How do you guys run it? Are you running, it must be demographics depending on the type. I mean, uh, go a little bit more into depth, kind of like how that works.
Sure. Yeah. So there's a popular software called Buxton that a lot of people use for demographic data. We do not like them. We do not like them at all. They use census data, and which was taken in 2010, and they try and project forward, which has been 14 years, is really hard to get that right. So we use a couple different softwares. One of them is Pitney Bowes, and we use a lot of grocery anchor data, like grocery center data, because the data is actually really good around grocery centers. So we have a bunch of different subscriptions that we're paying for every month to give us this data, and we kind of just run our own analysis. And so the idea is like we'll do a grocery anchor study, and we'll figure out where are the most ideal patients already going or clients already going, and then we'll have like a tiered grocer anchor color coordinated key system. So like green will be the top, the blue, orange, red, whatever. We lay that down on a map, and then on Google, we use Google Earth for this so clients can use it. Then we do a competition analysis. So we try and figure out where's the competition, and we'll put all those on a map, and then we layer those two maps on top of each other. Then we try and say like, okay, where are the most ideal patients already going, and then where's the least amount of competition, and then we try and pick those specific trade areas or intersections to go and find a new location for them.
Oh, very interesting. It's very cool. Yeah, healthcare is a great niche to be involved with because it's not going anywhere. You know what I mean? It is there's not really recessions with healthcare. You know what I mean? And all those people need those services no matter what's happening with the economy.
Yeah, yeah, 100%. I mean, like, we sat down back in 2019 when we started working together, and we had this conversation. It's like, what if we have another recession? Like, what are we going to do? Where are we going to go? And the other thing about it is, aside from just being resistant, like recession resistant, is that it's a little bit less competitive than like trying to go out and develop for like a 7-Eleven or whatever. And so we've actually been able to make good relationships with national tenants. Like, we had a healthcare user give us an assignment in Lee's Summit in Missouri, and we got this building under contract, and then we got Starbucks to come along as the second tenant. Well, the healthcare client backed out. Starbucks signed their lease, and we brought another physical therapist in, 90-unit physical therapist in, to sign the balance of the space, and that helped us develop a relationship with Starbucks. So now we have a relationship with Starbucks, and we've done some stuff with Chipotle and AutoZone and a couple other like national tenants. So now when we find good locations that are going to help our healthcare users like get good street visibility, we can reach out to some of our other retail tenants. Then like in a situation where we have to do a new construction development, well, that's really expensive right now, and I don't think it's getting any cheaper. The rents are like 40 to 55 to $60 a square foot for new construction development, right? Especially if you do single tenant. So if we can like utilize our network of other tenants, we can do a multi-tenant building, like 2 or 3 tenants. Now we can start to bring down the cost of that rent, because a lot of developers, for like obvious reasons, are not willing to do single tenant buildings, right? Because it is higher risk. I mean, sorry, not multi-tenant buildings. They'll do single tenant, not multi-tenant buildings. And so, yeah, by going through and having a strategy that allows you to do multi-tenant to bring the rents down is something that we've been seeing a lot of interest in.
Interesting. Very interesting. Yeah, it's great. It's great you're working with those national tenants. I mean, we see national tenants doing our market forecasts and reviews and analysis when and it's just like you start seeing Starbucks or other tenants, and you're like you understand the area because these tenants have done so much research in finding out where they're going to where they're going to start a store. You know what I mean? And so it's like when you see that, it's just like it makes the whole area. I think it's just something that shows you exactly what's happening. So it's great that you're able to work with them, and obviously it's great for that property, but it's also, it's great for any surrounding properties around it too.
Yeah, yeah, 100%. So yeah, it's just, when you're thinking about healthcare, it's recession resistant, pandemic resistant, inflation resistant, right? All those things. Now, the challenge is that they are capped in how much revenue they can make, because it's either capped by insurance or it's capped by government reimbursement rates. And so with real estate, like patient demand is good. Lots of people want to come see it, but like the patients don't necessarily dictate or control how much they're going to spend. And so that's why it's a really interesting, well, I should say difficult industry to be in. So what do you do like when the cost of a new construction building goes, like you have a demand, your patient base is growing, you need to expand, you need to do more locations, but real estate's up here, right? So that's kind of like why we came in with that strategy, is like, well, we know that you're like, if we can get the rent to an agreeable rate, like we know you're not going to default, right? We have at least high conviction that you're not going to default. So how can we help your rent get more affordable? You do a multi-tenant building. So yeah, that's kind of the reason, some of the reasons that we like the healthcare space, and how we've been dealing with some of the problems.
That's great. Awesome. So like, you've been involved with real estate for so many years. You're a real estate investor yourself for many years. Can you give us like what you would say would be common mistakes you see real estate investors make? And this can be from, it could be house hacking, short-term rentals. It could be what you work with now with your brokerage. I mean, what are these common mistakes that you'll just see real estate investors make, whether they're new or whether they're experienced?
Yeah, so the short-term rentals and the commercial healthcare real estate are like very different beasts. Like, I mean, two different businesses almost, right? And so I'll answer each of those questions. So the what I would say to the real estate investor who might want to, they're just getting involved and they want to start with a single family, which is great. I mean, that's how I got involved too with a single family, is that it's really easy to underestimate how much time this is going to take. Like if it's like if you got one location or one house, and you're doing long-term rentals, you might not feel the time because it's a call once a month or whatever, but it's also really hard to make money like cash flow right now based on interest rates and um, just the cost of real estate going up. So I don't think it's a bad investment, but I think that you might be spending your time for free, and so I think it's just important to be aware of the trade-offs. Like, it's almost like it's borderline worth it, right, to go out and look for an investment property just for the sake of like, building monthly cash flow. I don't know that you're going to accomplish that right now. Now, if you own a property and you're moving out, I think it's definitely worth it to hold on to that property, right, and then go buy a new one. Like if it's your primary residence, hold on to that, and then you can decide whether you want to do short-term rentals or long-term rentals. But just be aware, short-term rentals is a lot more time intensive, and so I think a lot of people just don't understand the time trade-offs that they're making, because they look at the money and that's great, but the question is always compared to what, like, what could you be doing with your time, or what could you be doing with your money that would make a better investment? Even to like when it comes to keeping your house or selling it, the question is, okay, if I sell it, how much capital will I have after taxes? Maybe you do a 1031 exchange by buying your new house, so you have a little bit, but like the question is always, what could I be doing with the money? And so if like the reason I like holding is because you don't have to pay taxes. So our strategy has always been hold and refinance. And so I hope that answers the question about what people are looking to get, like advice for looking to get into it, especially in the residential. On the commercial side, I see people that are essentially waiting for these insane deals to drop into their lap, And I guess like if you're at least in terms of finding a building for your business, like a lot of times people will compromise the location of their building so that they can own it or they can get a good deal for it at the cost of their business and how much street visibility they have or how many new clients they're going to get based on how easily it is to get to their location or the proximity to other things that people go to, right? And so my advice there would be like, don't compromise the location of your real estate so that you can own it. Focus on the building, focus on the location in your business first, because you can use that money. I mean, people like will often say to me, "Oh, I've been throwing money away. I threw away millions of dollars over the past decade or whatever," And it's like, well, did you really throw it away? Because like, what would you have done with that money? You didn't have to come up with the capital for the down payment. So you could have invested that money in something else that would have got you a return. That's the real question. Like, what would that down payment? What would the capital for the down payment? What has that been doing? Has it been generating more or less of a return than you would have gotten if you put it into your building that you occupied? A lot of times it would. So I don't think that like necessarily owning the building that you do business in is always the right call. So does that answer your questions?
Yeah, that's perfect. That's a lot of great information. I was thinking when you said before about people getting involved on the residential side, whether that's long-term rentals, short single-family houses, long-term rentals, or the short-term rental aspect of it. I had just reminded me that I had a mentor years back, and everybody talks about ROI, return on investment. He would say ROT, return on time. And if you actually start tracking stuff, I mean, you start seeing what you're making, and you're like, wow, I make 4 or 5 times this at my regular job or whatever you're doing. And then you realize, well, is this just an investment? Do I really want to go into if this is just like an investment and I don't really want to be a property investor, I'm just trying to get some passive income, then it's something like maybe like you said earlier, is you become a limited partner, you know what I mean? Or something like this. And you've realized that the time that you've spent, say 5 hours reviewing a deal or whatever it might be, and you're getting returns for 5 years, you know what I mean? And you've really narrowed down that return on time aspect of it. And that's a lot of great information there. So yeah, the other thing too is like I always cringe when people are always saying that if they're renting anything, they're losing money, and you're like, it's not. You know what I mean? It's like everybody has different goals and everybody has different things they're working on. I think that why people always say, okay, your house for most people is the largest investment, right? And a lot of people, that's where the majority of their net worth is in their house, because it's a required pretty much investment plan. You know what I mean? You have to pay that mortgage every month, right? And as you pay your mortgage, not counting any type of appreciation, you're putting money pretty much in a savings account. You know what I mean? So it is that equity as it builds. You know what I mean? So it's like, I don't know. I just think it's one of those things where I don't know. It's people, different business plans. Maybe it's better to rent, especially if you're starting a business. I mean, going out and buying a property, like getting involved with what you were in 2013, you don't want to find yourself in that situation where you've probably purchased a property and it doesn't work out.
Yeah, yeah. I like, and then yeah, the comparison of like ROT, return on time. I think it's always good for people to start as a limited partner. Like before I started syndicating deals, I was a limited partner. I invested in a couple different deals and I just got to see, how it worked and a little bit behind the scenes. And so that's my advice too, is like, if you're thinking about getting into it, find a deal that you want to invest in and just invest as a limited partner, and see how that goes.
For sure. So, Austin, how can our listeners learn more about you and your business?
Yeah, so I'm pretty active on LinkedIn and a little bit active on Instagram, but yeah, check us out on LinkedIn. So it's just Austin, like the city, hair like on your head. Check us out on Instagram, and we're posting stuff on there on what we're working on all the time.
Well, thank you so much for coming on and sharing your story, and looking forward to connecting with you here in the near future.
Okay, thanks, man. I appreciate it.
Hi, guys. It's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Nothing in this episode should be considered specific, personal, or professional advice, Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.